Hi and welcome to this week's YouTubes that I post each Sunday. It's broken down into two. The first one is my macro outlook, which is then followed by some technical analysis. I hope you enjoy them both. Okay, so let's start with a little look back at last week. So we saw the markets react to US data. It showed the Fed's decision on when to cut rates is just becoming even more complicated. The CPI was at the top of expectations, but then PPI just blew through that and came in almost double expectations at up 0.6%. The main contributors to that were energy and food. And then to cloud things even more, retail sales were lower than forecast, as was Empire State Manufacturing Index, which was expected at -7 and came in almost 3 times that at -20.9. And then, of course, if we look back at the previous week to that, when NFP was released, the unemployment level raised to 3.9%. And to be honest, I expect that to continue to climb. Now, as I've been mentioned recently, most hires that are taking place are part-time. And now I think what we're starting to see is those seasonal hires, from over Thanksgiving and Christmas and the sales in January, etc. Those contracts have now finished. Now, again, I've been stating since last year that June or summer is likely to be the earliest that rate cuts will happen. And I've got to be honest, I still believe that. This week we saw the start, this week we will see the start of many central bank rate decisions. Now, Japan finally may join the rest of the world and move away from negative rates. Again, that remains to be seen, but so there's been some recent wage deals done which may push them into that area. And, at the moment they are the last country in the world with negative rates. But then this week coming, we have got so many more as well. We've got the Australian rate decision, PBOC rate decision, and then of course the big ones for me, FOMC on Wednesday. We will get a dot plot as well, so that gives us what the forward forecasts are from the voting members of the Fed. And then the following day on Thursday, we've got the BOE's decision as well. Now, if that's not enough for the markets, then there's a whole mass of data being released this week too. So, expect a really busy week and potentially quite a volatile one as well. Just moving on to geopolitical situations, because obviously that's causing some of these problems, especially for the central banks, and that's that rise of inflation that suddenly is, it was all very positive, all moving in the right direction, and then of course, now we're starting to see inflation pick up slightly again. Again, not really through demand, is it? It's much more a case of costs increasing through shipping, oil prices rising, especially after Ukraine started to attack Russian refineries with drones. And all of this is contributing to higher prices for food and energy. Probably not quite so much for nat gas, because the temperatures so far haven't been too bad, especially in Europe over the winter, of course. So stocks are very high. But just sort of continuing with the geopolitical situation, Houthi continue their attacks on ships that are risking the shortcut through the Red Sea. And there's, obviously I don't know, but I'm guessing that there must be substantial international pressure on Israel to refrain from a full assault on Rafah, which is, seen probably as the final real stronghold for Hamas. And I suppose it's also really I would say probably the last refuge area for probably over 1 million Palestinians. And of course, that makes it even more of a problem. Uh, the US have managed to sort of make a makeshift port, so at least the Gaza's sort of northern Gaza's now seeing some supplies reach it finally. Ukraine's desperate for military supplies to hold out against the better equipped Russian army, and of course those drones attacking the Russia's refineries as well. So we saw oil pop up after that. Now, unemployment does seem destined to increase in most countries throughout the year, and that's partly because job offers will become harder to find, and part of that is due to the fact that those in jobs are now holding on rather than looking to move for a higher salary. So I think this is going to be a major factor of job availability in the future. And we've seen that ratio of jobs to those that are able to work drop, especially if you look at the US, from a high of 2 to 1 down to around about 1.3 to 1 now. Okay, so let's end with a look at the markets from last week. So we saw stocks react to the data. They did end the week off the highs. In fact, Nasdaq closed near the low of the week, and of course the Russell got sort of pretty much smashed on Thursday, although that one did sort of buck the trend and steady a little bit on Friday. And of course Friday was triple witching with stock futures expiring, so they have all now moved on to the June contract. Gold failed to add to the previous week's new high, and that closed last week around about 21.60. And I will cover my expectations for that in part 2 when I do my technical analysis. Silver had a very strong week. It had been lagging gold, and not sort of hit those levels since December last year. So so it's playing a little bit of catch up, and perhaps that was investors moving out of gold and into silver. The dollar had a much better week. Expectations of those Fed cuts being pushed further down the road, and even Bitcoin lost some of its recent sparkle and closed just above 68,000. Again, I'm going to cover most of that in my weekly technical analysis, so stay around for part 2, and you will get to hear what I think is going to happen this week, or at least some of the major levels for where I use the one-day chart. And of course, feel free to sort of share these links and let your friends know if they're interested in trading, because what I'm trying to do really is to help traders prepare, to help them prepare better for the week ahead, of course. And now I'm going to move on to part 2 for my analysis, so I hope you'll stay with me for that. Now, I just want to sort of just talk a little bit here about my services that I offer. So there's a daily newsletter that includes global news, headlines, my views, full articles. That is a subscription service. There's one-day workshops. This will help you to discover if trading could be your next career or even just a second income. Otherwise, maybe you're already trading, but there's a few gaps that you'd like to fill in, and I can help you with that, because that will accelerate your trading and your performance. And then there's a 1-week intensive course. That's going to make you feel competent and confident after just 1 week. It's going to give you those foundations that you need to build your trading career on. And if you've got that in a trader, we'll find it. And now that does also include a free trading challenge. Then I do a Flexi Masterclass, which includes 6 weeks of guided learning. they can be split up. You don't have to take them all at once. And this is designed to provide you with all the knowledge and trading tools that you're going to need to navigate any market and also on any asset class. I trade them all. And as I say, you can spread those weeks out over months if you need to. It's no problem for me. And again, that does include a free trading challenge. Now, trader mentoring, I'm doing more and more of this. And this is to help you reach that next level time and again. And I'm doing much more in the way of one-on-one sessions right across everything that I'm doing now, rather than sort of looking for big groups. I do provide a lot of trader educational content to individuals, exchanges and brokers. And as I mentioned earlier about the trading challenges, if you're looking for a funded trading account, then you can contact me for details just about the ones that I use, or you can sort of take one of the courses where I'll give it to you for free at the end of it. Okay, so then moving on to our disclaimer, just to make you aware that trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. And many companies provide leverage, so just be aware that you can lose substantially more than that initial investment. Everything I include in here is just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, you've got to consider the risks involved, definitely your financial situation, your level of experience, and your risk appetite. And of course, it's important that you only risk capital that you're prepared, but also that you can afford to lose. And if you've got any doubts whatsoever, seek independent financial advice and do that before you risk your capital. So many people come and find me after they lost money, which is sad. They should come to me before. And yeah, so listen, that's it for part one. I hope to see you in part two, where I'm going to do some technical analysis.